As rates begin to drop, everyone's going to tell you it's the time to refinance. But is it? We're going to look at 4 pitfalls to look at as you consider a refinance. So I'm here with Lindsay. How you doing, Lindsay?
I'm good. How are you, Joe?
Good. We're talking about refinancing.
Yes, we are.
But we're talking about the things that a lot of lenders don't talk about.
Such as?
Such as the reasons why it might not make sense. Everyone tells you why it makes sense to refinance. But what should people look for? What should they look at when they're considering a refinance? And what are the things to look out for?
I'm glad you bring that up because everybody thinks refinances are just everything's great, right? And they don't know what to look out for or that there are some maybe unpleasant parts of it.
And I think some of these might shock you, especially number 3.
Awesome. Well, I've got 4 in mind that I'd like to discuss that were brought up.
Sure.
The first one is overlooking closing costs.
Right. So a lot of times, I remember this from being a loan officer where, a lot of loan officers would sell the payment, just like in a car, like, oh, look at the payment. But you can't ignore the cost to get that loan. And, we're going to talk about, the last one I think brings this point home, the 4th one. But you have to consider that there's an actual cost to refinance. And if the cost doesn't make sense, then you shouldn't do the refinance.
So it's about making sure that the benefits are worth what you have to put down to make it happen?
Correct. I look at the cost and I look at the benefits. And if the benefits don't outweigh the costs, you shouldn't do it.
Yeah.
So there's some math behind that. And a lot of lenders might add a lot of closing costs into your loan because they'll say things like, look, no money out of pocket. Well, that doesn't mean there's no money out of pocket. Or you
don't have to bring anything to the table. I've heard that one too.
Don't have to bring anything to the table, but it just gets tacked on to your loan. So they're using the equity in your loan to pay for these things. Nothing is free and nothing's given away typically.
That seems a little tricky to me.
It's a little tricky, but you've got to make sure to consider the closing costs and the cost it took to get that rate. So if they had to use a lot of points that they bake into your loan to get a lower rate for it to make sense, they're going to sell you the payment. Say, look, the payment's you're saving X amount of dollars a month, right? But are you really saving that money?
Right. A little bit of a bait and switch there.
A little bit, yeah.
So the second one was resetting the loan term.
Right. So, if you are currently in a 30-year loan, you've been paying on it 5-6 years, and now you're going into another 30-year loan. Remember, the way amortization works on a 30-year fixed rate mortgage is that it's front loaded with interest. Your first payment is it's very little principal and mostly interest. Your last payment is almost all principal and very little interest. So if you've been paying on a loan for 4 or 5 years or 5 or 6 years, you've been paying more interest than principal. And so it's just going to reset into that 30-year term. So you want to make sure you compare apples to apples.
So when that happens, are you back to just paying the interest again?
I don't know what that means.
When it resets.
When the loan resets. Well, yeah, because you're going back to a 30-year loan, and the amortization schedule starts over if you go to another 30-year loan. And so you really got to weigh out, am I doing this to pay off my loan faster? Or am I doing this to have a lower payment and have a better cash flow? And am I okay with going into more debt?
Right. Well, the third one was focusing only on the interest rate.
This is a big mistake that people make. If they say, look, I'm at a 6% right now and I want to be at a 5% and I'm going to save this much money, there's more things to consider. What's the cost to get that 5%? How long am I going to be in the home? Does it make sense for the amount of time I'm going to be in the home for this refinance? So there's a lot of things that you can't just look at the interest rate alone and say, I'm saving a point. Rule of thumb says if I save a 1%, then that makes sense. That might not make sense. I mean, imagine being in the last year of a 15-year loan and someone's trying to sell you a lower rate on a refinance. You're like, yeah, I'm going to save a point, but that's an extreme example, right?
Yeah.
But you're not really going to save money by going into a new 30-year loan. You're going to pay a lot more in interest.
Yeah, understandable. Well, the fourth one, which is the one that was going to be a little bit surprising, which I'd love for you to dive a little bit deeper into, is not considering the break-even point. What is a break-even point?
Well, like we mentioned before, it's not just about the rate. It's not just about the closing costs. You got to look at everything together. And the break-even point says, look, if I'm going to save $300 a month through the refinance, right? But it's going to cost me $9,000, right? So I do the math to figure out how many months is it going to take me to get to the break-even where my closing costs made sense. Right? So that is what's that, 30 months? Did I do the math right? 9,000 divided by 30, 90 divided by, yeah, so that's about 30 months, right? So yeah, 30 months. So it's going to take 30 months to break even on that loan. So by saving $300 a month, after 30 months, you will have saved $9,000, and that was the cost of the refinance. And if you're going to be in the home for less than 30 months, why would you do that loan?
Yeah, what's the point?
Yeah, unless you're strapped for cash, and then but now you're you've paid a lot of money, and you might have a better cash flow during that time, but you're going to get, if you're selling your house, you're going to get less out of that house because you're going to owe more on it. So to make sure that the plan makes sense, am I going to be in the home long enough? Am I saving enough money? Am I restarting a loan? Like if you've only been paying on a loan for a year or two, then it's the switch in term isn't a huge impact. But if you've been paying 5 or 6 years, then you're start to question, well, now I'm paying this much principal, and after 10 years, I'm going to be paid this much down versus a lower rate, I'm only going to pay this much down. So these are things that you want to consider. And a good loan officer, a good mortgage loan originator, licensed, has the ability to review these things with you. If they're only selling you your savings in the payment and not telling you your break-even point and not asking how long you're going to be in the home and not, looking at the whole picture, you need to find a loan officer that's actually going to help you make an educated, rational, good decision.
Right. So what advice would you give for somebody that just listened to this podcast and heard all of these pitfalls? What would their next steps be?
Well, do the math. And if the math is difficult for you, which I believe, for us, we do it every day. But if you've never done that math, make sure the loan officer you're working with is sharing those numbers, that they're looking at apples to apples, that they're not just saying, well, you're going to save $300 a month. Why wouldn't you do this?
Right.
It makes total sense. Well, the $300 a month in and of itself does not necessarily tell you if it makes sense or not.
Right.
And if someone isn't giving you the math either because they don't know how to or don't want to, that's a sign that they should go use and call someone that will walk through the steps, that will tell them the good, the bad, and the ugly, regardless of whether it leads to a loan for that company or not.
Right.
And that's the important thing to remember. I've told people I've made more money by saying no to the right people because if I give them good advice, that will lead to them sharing our information with friends and family.
Yeah.
And we're we work in a small community. And if we took advantage of people, we wouldn't be here for 22 years, right?
Right.
But that's the thing. Give good advice. Now, if you're living in Arizona and watching this, make sure you work with a local lender there that knows what they're doing, that knows how to run the math, that can look at the holistic picture and not just tell you that you're going to save a couple $100 a month.
Yeah.
Right.
I think the key is giving you the information to make an informed decision so that when you are ready, you can pull the trigger.
Right. And we tell people to get ready now for when rates are at the point where they want to. We call it refi ready. And so if they work now with their trusted loan officer, someone that will go through the numbers, explain things to them, tell them the math, give them all the info, even if it leads to them not getting the sale, which in my book's okay because you educated someone and hopefully you'll have a good referral, a source of referrals for the future. That's a win-win.
Yeah.
But, to make sure you get ready now because sometimes these opportunities come and they go fast. And our salespeople don't want to be pushy and tell you it's going to only last today because no one knows. The rates might go down and stay down. They might go down for a day and go back up like they did in February and they did again in, what was that, July?
Yeah, July.
We had a couple dips and they were short-lived. So,
would have been nice to be ready when that dip came.
Yeah. And, and rates might never go down.
Yeah.
Everyone thinks they're going down. They probably will. But what if something else happens, they don't go down? So if you have an opportunity, it makes sense. Seize the opportunity. There are some waiting periods, like once you do a loan, like a conventional loan or a VA loan, they might have to wait 6 months or 210 days, 180 to 210 days to do another refinance. But you really, if it makes sense for you to pull the trigger because you don't know if that opportunity is going to come up again.
Yeah. Great advice.
Yeah.
I also like to know the negative as well as the positive to make an informed decision. So
I think you have to. If people are only telling you the rosy stuff, it's going to leave you wondering, what am I missing?
Yeah.
Right? And you might be missing something. They might be giving you great advice, but you might be missing something. And that's what you just need, the whole picture, and understand that it's not this and something else. It's this.
Right.
So
that's all I had for you.
All right, cool.
Those four pitfalls.
If you're looking to refinance, please reach out to us. If you live in the state of Florida, we can certainly help you. I hope we can help you. We might not be able to, but we're going to give you the information for you to make an informed decision. The information's down below. If you have any questions, comments, please put them down below. We greatly appreciate it. Don't forget to like and share and do all those things the kids say to do. Thanks. We'll see you next time.